the fight between finance capitalism, industrial capitalism, and socialism, and why you decided to publish this book now.
Well, the book came out of a series of 10 lectures that I did for my Chinese audience. I've been a professor at Peking University for a number of years in economics, and have professorships at other universities, Wuhan and Hong Kong. And I have a fairly large audience of about 65,000 people for lecture there. And I was asked to give my general overview, sort of a history of economic development in the West for the Chinese. And in order to understand today's finance capitalism, you have to understand what industrial capitalism was as it was described in the 19th century. And it's often forgotten or played down that industrial capitalism was revolutionary. What it was trying to do, from the physiocrats in France in the late 18th century to Adam Smith, John Stuart Mill, Marx, and the whole late 19th century flowering of socialism, the ideal of classical value theory and rent theory was to say what is the actual value, the cost value of producing goods and services, and what is earned by the capitalist and when he employs labor to make a profit, and what is unearned. And what's unearned was the landlord class. That was the hereditary warrior class that had conquered all of the European kingdoms in the Middle Ages. And the attempt by England's industrialists was saying, look, we cannot become the workshop of the world. We cannot undersell foreign countries if we have a landlord class raking off all of the money in land rent, and if we have predatory banking, where the wealthy people just lend really for buying property or making distress loans or predatory loans that have nothing to do with financing actual capital formation. Well, what made this capitalism revolutionary was the British industrialists and advocacy of industry. Even the bankers in Ricardo's time said, well, in order to overthrow the landlord class, which controls the House of Lords and all of the upper chambers of government in Europe, we have to have democratic reform. If we have democratic reform and give voting to the people, they're going to vote against the landlord class. And then we can have an efficient economy where our prices of our exports and our goods and services reflect the actual cost of production, not the rake-off for the rentier class, not the rake-off of what landlords take, not the rake-off of what predatory bankers take. And the whole long 19th century leading up to World War I was this revolutionary value theory that depicted land rent and monopoly rent and financial returns as being unearned income and wanting to strip it away. And all of this seemed to be moving towards socialism. The industrialists were all in favor of government public utilities, of government enterprise, because they said if the government doesn't provide health care, then individuals are going to have to pay it, and it'll cost a lot of money, like it does in the United States. And so you had the conservative Prime Minister of England, Benjamin Disraeli, saying, health, all is health. We've got to provide public health for the people. And it was the conservative Bismarck in Germany that says, we've got to provide pensions. If labor has to save up for the pensions, then it's not going to have enough money to buy the goods and services that we Germans are producing. We've got to make pensions public. So all of this move towards socialism was not only in favor of increasing living standards, which soared in the 19th century, but also in freeing economy from the rentier class, from the landlords, from the bankers. And for the classical economist, a free market was a market free from landlords, free from bankers, free from monopolists. Well, needless to say, the rentiers fought back. And by after World War II, we've seen a continual anti-classical theory, replacing the classical idea of free markets with a value-free theory, saying, well, everybody earns whatever they have. All wealth is earned, not unearned. And if Goldman Sachs partners are paid more than anyone else, that's because they're so productive. So you had to move rejecting classical economics to junk economics and a kind of artificial economics that doesn't really talk about how finance capitalism has worked. And as it turns out, the business plan of finance capitalism was so predatory that it was anti-industrial. That's why President Clinton in the United States moved to invite China into the International Labor Organization, saying, well, we can fight wage rises in America by a race to the bottom. We can hire Asians to do work, and that will cause unemployment here, and that's wonderful for the industrialists. It will basically cut wages and keep American wages down. Well, that basically is the strategy of finance capitalism, and the aim of finance capitalism is not to invest in factories and plant and equipment and research and development, but to live in the short term, but to make money by financial engineering, not industrial engineering. And it becomes predatory. And so you have the whole ideological attack on public enterprise. You have Frederick Hayek's The Road to Serfdom, where you say if the government provides public health care, that's the road to serfdom, where actually it's finance capitalism that's the road to debt peonage and serfdom. You have now a whole disparagement of government, and all of this is a counter revolution to the revolutionary impetus of industrial capitalism in its early stages. And it's true that corporations now are just as right-wing as the banks and the hedge funds, but that's because the industry has been taken over by the financial sector, and the heads of almost every industrial corporation are rewarded to how high they can push the stock price to exercise the stock options they're paid in. And you increase the stock price not by investing more, not by hiring more labor or increasing productivity or increasing sales, but simply by using whatever income you have to buy back your stocks. And by buying back your stocks, this forces up their price. And most of all, by giving political contributions in this country to the Democrats and Republicans alike to appoint Federal Reserve heads that have spent $7 to $9 trillion buying up stocks and bonds to increase the price of buying a retirement income, to increase Wall Street prices, to increase housing prices, and make America even less competitive industrially. So finance capitalism is what is essentially deindustrialized the United States and turned the Midwest into a rust belt. Well, the alternative, obviously, is our societies that have not followed this neoliberal finance capitalist plan. And the most successful economy, obviously, has been China, which is why I've been spending so much time there. And obviously, China has done exactly what 19th century United States, Germany, England, and France did. It's kept basic utilities, basic needs, housing, and above all, finance and banking in the public domain as public utilities. Instead of having an independent financial sector operating on its own self-interest, the Bank of China creates the money. And the Bank of China lends money by deciding, where do we need to have investment in real estate to provide housing for the population at as low a price as we can make it? How do we provide, build up the industry? How do we provide an educational system with training? How do we provide health? And you have, the fact is that the central planning in a efficient socialist style, not the Stalinist planning that everybody refers to of Russia, but a mixed economy, as you have in China, which is truly a mixed economy, with guidance, like the French call planification. Well, that is obviously the way in which you survive, and you avoid the kind of overloading the economy with debt service, with high rents, with high payments to the healthcare monopoly in the United States, by avoiding all of this payment to a rentier class that has what the classical economists called unearned income, predatory income. And instead of unseating them, we've put them in charge and made the banks and Wall Street and the City of London and the Paris Bourse the central planners. So we do have central planning, much more centralized than anything that was dreamed by the socialists. But the planning, centralized planning, is done by the financial sector. And financial planning is short-termism. It's short-term planning. It's taking your money and run. And that's what is stripping and impoverishing the global economy today.
So can you talk about what your idea of free trade imperialism is and how it relates to U.S. foreign policy?
Well, the Nobel Prize is given basically for junk economics, and probably the worst junk economist of the century was Paul Samuelson. He made the absurd claim that he proved mathematically that if you have free trade, then country and don't have tariffs and don't have any government protection, then everyone will become more equal. At least the proportions between labor and capital will be more equal. Well, the reality is just the opposite. And the term free trade imperialism was actually created by a British historian of trade theory who pointed out that, wait a minute, when England went for free trade, the idea was if we have free trade, we can stifle other countries from being able to industrialize, because if we have free trade, then we can tell America, we will open our doors to your markets, meaning the markets of the slave South that Britain supported, and in exchange, you will open your markets to our industrial goods. America followed that until the Civil War, which was fought not only over slavery, but by the Republican Party after 1853, that said very explicitly, if we're going to win the election, the Whigs never could win. If we, the new party, are going to win the election and industrialize America, we've got to integrate ourselves with the anti-slavery issue, with emancipation, but for us, the economic war of America is a war to either we're going to have protective tariffs in the North, or we're going to end up as a non-industrial raw materials producing society as the South wants. And that was the debate from 1815, when the Napoleonic Wars ended and world trade began again, until really the Civil War. And America became strong in the way that Germany became strong too, by having protective tariffs in order to have prices large enough to nurture what was called infant industry, to nurture American manufacturing. And I wrote a long book about this, published years ago, based on my PhD dissertation, America's Protectionist Takeoff. Well, the English tried to fight against other countries protecting their economies, saying that if you just have free trade, you'll get rich. Where the reality is, if you have free trade, you'll get poor if you're not already able to have industrial and labor productivity and agricultural productivity on a par with the most advanced countries. The free trade was an attempt to prevent other countries from investing government money in building up their agriculture, in building up their industry, in building up their productivity, in creating a school system to raise wages, to make wages more productive. And the American protectionists said, well, we're going to have a high wage economy because high wage labor undersells pauper labor. And American skilled, well-fed, well-rested American labor can produce much more than the pauper labor of other countries that have free trade. Well, what the leading American protectionist economist, Erasmus Peshine Smith, went to Japan and helped helped Japan break away from British free trade, helped Japan industrialize. Other American economists, other foreign economists, all picked up the ideas of the American protectionists, like Friedrich List went to Germany promoting protectionism. And Peshine Smith's book, The Manual of Political Economy, was translated into all the foreign languages: Japanese, Italian, French, German, and you had Europe realizing that free trade polarizes economies. Well, it was this that after World War I, and especially World War II, when you had orthodox economics turning into basically propaganda, that's where you had Samuelson and others try to convince other countries governments are bad, leave everything to the wealthy people, to the finance people, trickle down economies. It's all going to trickle down. Don't worry, just give more money to the rich, and don't have any government interference with markets. Whereas America had got rich by interfering with markets to shape them in the years leading up to World War I. But after World War I, America had already achieved its industrial dominance. And it was after World War I that America said, okay, now our protective tariffs have enabled us to outproduce all the other countries, and our protectionist agriculture especially. The most protected sector in America has always been agriculture since the 1930s. Basically, it said, well, now that we can outproduce other countries, we can undersell them. Now we can tell them to go for free trade. And after World War II, the Americans created the World Bank for economic impoverishment, and the International Monetary Austerity Fund. And the World Bank's leading objective was to prevent other countries from investing in their own food production. The guiding line of the World Bank was, we've got to provide infrastructure for building up plantation agriculture in Latin America and Africa and other countries, so that they will grow tropical export crops, but they cannot be permitted to grow grain or wheat or feed themselves. They must be dependent on the United States. And so the function of free trade, the World Bank, and the International Monetary Fund has been to finance dependency, backed up by the American support of dictatorships throughout Latin America, who agree to have client oligarchies supporting pro-American trade patterns and avoiding any kind of self-reliance, so that the United States can do what it's recently done to Russia and other countries: impose sanctions. Say, well, now that you've depended on us for your grain, we can now impose sanctions, and you can't feed yourself if you don't follow the policies we want. That was the policy that America tried to use against China after Mao's revolution. And fortunately for China, Canada broke that monopoly and said, well, we're going to sell grain to China. China was always very friendly to Canada in those earlier decades. So basically, free trade means no government, no socialism. It means central planning, essentially by Wall Street. Countries should let American firms come in, buy control of their raw materials, resources, control of their oil and gas and mineral rights and forests and plantations, and basically let other countries send their whole economic surplus to the United States, where it will be duly financialized, and to buy out other countries' raw materials and rent-yielding resources.
But your analysis, I think, is even more important and more accurate, because your argument is not only is it geopolitical, but the geopolitical struggle is rooted in economics, and this is an economic struggle between systems. So talk more about the new Cold War and how you see it.
Well, as we're seeing now, the world is dividing into two parts. We can see that in the fight against Russia, which is also a fight against China and against India, as you noted, and it seems Indonesia and other countries as well. The United States is pushing a world that can be controlled by American investors. That the ideal of the American neoliberal plan is to do to other countries what it did to Russia after 1991. Take all of your public domain, your oil companies, your nickel mines, your electric utilities, give them all to a wealthy oligarchy that can only make money once it's taken control of these companies by selling the stocks to the West. The West will buy out oil, just like Michael Khodorkovsky tried to sell Yukos oil to Standard Oil in the West. And we've got to put an oligarchy that will sell all of the national domain, all of the patrimony in natural resources and all the companies to American investors on the cheap. The Russian stock market led all the stock markets in the world from 1994 up to about 1998. This was a huge ripoff. The United States wants to be able to do that to the rest of the world. And it was furious when Russia said, we've lost more population as a result of neoliberalism than we did in all of World War II fighting against Nazism. We've got to stop. And Russia began to say, we've got to use Russia's population and industry and natural resources for Russia's benefit, not for the United States' benefit. Well, the United States was absolutely furious with this, and the fury has erupted in the NATO war against Russia in the last few months and what's ongoing now. And the United States says, well, U.S. State Department officials have said, what we want to do is carve up Russia into maybe 4 different countries: Siberia, Western Russia, Southern Russia near Central Asia, maybe northern Russia. And once we've done that, we cut Russia off from China. Then we go into China. We finance, we send the ISIS and the Al Qaeda into the Uyghur areas, the Muslim areas, and we start a color revolution there. And then we break up China into a northern part, the southern part, the central part. And once we break them up, we can more or less control them, and we can then come in, buy up their resources, and take over their industry, their labor, and their government, and get richer to obtain from China, Russia, India, Indonesia, and Iran the wealth that we're no longer producing in the United States now that we've deindustrialized. So that is, the world is dividing into 2 parts. And the one part is not simply the United States and its European satellites on the one hand versus the non-white population on the other hand. It's finance capitalism versus the rest of the world, which is protecting itself by socialism, which in many ways fulfills what was the ideal of industrial capitalism during the 19th century, when industrial capitalism was actually progressive. And it was progressive. That's part of the whole theme of my book. It was revolutionary. It tried to free economies from the legacy of feudalism, from the legacy of hereditary landlords. And now the financial class is no longer the landlord class, but the financial class. And the landlord class pays most of its rent to the financial class in the form of mortgage interest, as it borrows money to buy property and housing and commercial sites on credit. And you have the kind of financialization that has increased housing prices in the United States to over 40% of income that is officially guaranteed for mortgages, that has priced American labor out of the market, privatized healthcare, 18% of GDP. That's pricing America out of the world market. Debt for car, auto debt, student debt, which in other countries education is free. That's pricing America out of the market. So you have a basically uncompetitive economy that's committing financial suicide, following the same dynamic that destroyed the Roman Empire, where an predatory oligarchy took over and maintained power by an assassination policy of its critics, just very similar to what America has been doing in Latin America and other countries. So you're having history repeat itself with this same kind of world split. And this split couldn't have occurred back in the 1970s. There was the Bandung Conference in Indonesia. There were other attempts at the non-aligned nations to break free of American imperialism, but they didn't have a critical mass. So right now, for the first time, you have a critical mass, and you have the ability of China, Iran, Russia, India, other countries together to be self-sufficient, they don't need relations with the United States. They can handle their own, they can create their own monetary system outside of the International Monetary Fund, which is basically an arm of the Defense Department. They can give loans to build up the infrastructure of countries outside of the World Bank, which is basically an arm of the Defense Department, the deep state. So you have the American economy essentially a merger between the military-industrial complex and the Wall Street financial fire sector, finance, insurance, and real estate, is a way that really cannot develop any more than the Roman Empire could develop by trying to obtain militarily what it could not produce at home anymore. Well, China and other countries, now that they have their industrial base, the raw materials, the food ability to feed themselves, the agriculture, and the technology, they can go their own way. And so we're seeing in the last few months the beginning of a war that's going to go on for, I think, 20 years, maybe 30 or 40 years. The world is splitting away, and it won't be a pretty sight, because the United States and its European satellites are trying to fight to prevent a inevitable breakaway that it cannot prevent any more than Europe's landlord class could prevent industrial capitalism from developing in the 19th century. Well, you have used the word shock and awe, picking it up from the US statements of shock and awe. There hasn't been any shock and awe. There's been a self-defeating piffle and laughter. That's not awe. There was an attempt to grab $300 billion of Russia's foreign reserves, saying, well, any country that leaves their reserves in American banks or in the American Monetary Fund to stabilize our currency, we can grab if we don't like their policy. So the idea was, now Russia's going to go broke. It can't afford to buy anything without US dollars. And the people are going to get so angry, they're going to vote against Yeltsin. And then we can pour in our money to twerps like Navalny and other right-wingers who will promise to be the new Yeltsins. Well, it didn't work that way. They did grab the 300 billion of Russia's reserves. Russia immediately said, okay, we have our own money. We're now, fortunately, we have enough oil and gas that we don't have to sell to Europe and Germany. If they want to freeze in the dark and let their pipes burst when the weather gets cold, that's their problem. We'll sell to India and China and other countries. And there wasn't, for a few days, the ruble plunged by saying, what is Russia going to do? So all the foreign exchange traders thought they were going to, you can trust Biden to have a really brilliant policies, brilliant president. I think Paul Krugman, the Nobel Prize winner, said Biden is the greatest American president since Truman. He said, that's so smart. This is that's why Krugman got the Nobel Prize for making statements like that. Immediately Russia said, well, obviously we can't get paid in dollars anymore or in euros, because you'll just grab them. So you'll have to buy our oil and gas in rubles. We're going to price it in our own currency, just like China had talked about pricing its exports in yuan. And so what's happened is that immediately the ruble not only recovered, but is now selling at a higher rate than it was before the American sanctions. So there was no shock at all. The Americans felt shocked. The Americans are shocked. The Americans are awed. The Russians are laughing, and everything is going their way. So it's almost as if I would not accuse Biden of being on the pay of Russia, and I would not say that the leaders of Congress are Russian agents, but if they were Russian agents, if they were paid by Russia, they could not have done a better job of helping Russia do catalyzing its protectionism that it wouldn't do itself. The fact is that President Putin and many of the people around him still were neoliberals. I mean, they began as neoliberals in the 90s. They began by hoping that they could make a arrangement with Germany and Europe, that Europe would develop their industry and make Russia as efficient an economy as Germany or the United States. Well, obviously, that hasn't happened. All the same, they didn't think of imposing protective tariffs as the United States did. They didn't protect their agriculture. They bought grain and cheese and other agriculture products from the Baltics and from other countries. Well, now that once the Americans put on the sanctions, beginning already under the Trump administration, all of a sudden, Russia had to produce its own food. And it did. It made the investment. It's now the largest agricultural exporter in the world, not a food deficit country. It's not importing any more cheese from Lithuania and the Baltics. It has its own cheese segment. And the sanctions are forcing Russia to do exactly what the United States, Germany, and other protectionist countries did in the 19th century, developing their own industry by isolating it from low-priced foreign imports that would be priced so low that the Russians otherwise could not afford to make the investment in factories, plant and equipment, research and development. So what the United States has done is actually catalyze Russia moving together. And also for 3 or 4 years, I've been talking with Russians and with the Chinese and other countries about the need to de-dollarize. You got, if you want to develop your own economy, you have to develop your economy in your own interest with public spending and planning independent from the United States. Well, now everybody thought that, well, in a few years, it may take a decade for China, Russia, Iran, all these countries to break away from the US. But America said, we're going to help you. We're going to speed up the breakaway process. We're going to, excuse me, we're going to isolate you. So you've got to band together against us. So that's exactly what it's done. You can just imagine how the Russians are crying all the way to the bank about this, and how China is watching what the Americans are doing to Russia and listening to President Biden saying, you know, Russia's not our real enemy. Our real enemy is China. And we're finished with Russia. Then we're going to go against China and do the same thing to us. Well, you can imagine what this is leading the Chinese government to try to plan to be sufficiently independent from the United States that similar type sanctions will not hurt us. And President Xi, in the last few weeks, has said we've got to make China as independent as possible. We've got to make our own computer chips. We've got to not depend on the United States for anything except maybe Walt Disney movies. That's basically about it. So it's as if, you know, I'd mentioned earlier that finance lives in the short term. American policy, being financial policy, lives in the short term, and it's looking, what can we make a quick attack, a quick victory, and forget about what's going to happen next. I'm told that if there, years ago, already from the war with Iran and then Iraq and Syria, in the State Department, if there were Arab specialists who spoke Arab, they were all fired because they said, well, if you can speak Arabic, you must have learned Arabic because you're sympathetic with them. You're fired. We won't have anyone who can read Arabic here. Well, now they fight in the last decade or so, they fired all the Russia specialists from the State Department and CIA, saying, well, if you can read Russian, why would you want to learn Russian? You must like something in Russia. Wanted to learn it, you're fired. So they have people who have no idea of what's happening in Russia, no idea of what's happening in these other countries, and they're blinded by their ideology. And if anyone would say, wait a minute, public planning and making education a public utility is actually making them more competitive, well, that's against the ideology. That's not the corporate type. And they're thought, well, we really can't trust people. Maybe they're tending towards socialism, and they're out the door. So you're having American policy pretty much run by the blind, and the Europeans are simply taking orders and money in little white envelopes from the United States to just show their loyalty, and basically are willing to spend 3 to 7 times as much for their energy, for their liquefied natural gas and oil by buying from the United States than they are by a long-term contract with Russia. Europe is willing to spend now $5 trillion on putting together ports that can handle shipping tankers for liquefied natural gas instead of relying on the Russian pipeline, the Nord Stream 2, that's already there. So Europe is making an enormous sacrifice. If it doesn't have Russian gas, and it refuses to pay rubles. It says, if you don't give us our gas and oil for free, you're attacking us, because we've been getting all your oil and gas for free, because all the dollars, all the money we pay, you've recycled to the United States in your foreign reserves. Thank heavens the US can grab it all. If you don't continue to give it to us for free, then you're attacking us. To the United States, other countries protecting their economy, other countries trying to raise their living standards, and especially other countries undertaking land reform, are viewed as enemies of the United States because they're an enemy of the neoliberal American financial system. And the idea, the unipolar world, where the United States gets all of the profits and rents and interest of the world economy, just as ancient Rome stripped its provinces by getting all of their wealth and income for themselves, not producing it at home, while impoverishing their own domestic population. It's just as an exact parallel. So Europe is willing to say, well, okay, if we don't have Russian gas, well, that means that our chemical companies cannot buy the gas to make the fertilizer to put on to make our crops grow, and our agricultural productivity is going to fall by about 50%. We're also going to spend a lot more money on America's military, NATO arms to support NATO. So we're higher food, higher military spending, higher energy costs. This ends Europe as an industrial rival to Asia and Eurasia, I should say, because now the Chinese Belt and Road Initiative and other spending investment, capital investment throughout Western Asia is creating a new productive plant that is not only self-sufficient, but is leaving the United States and Europe without any industrial competitive power. They've priced themselves out of the world market. They're no longer competitive. So that's the world is developing, and I'm sure the only way that the NATO countries can fight against it is militarily by threatening to bomb, but they can't fight economically. They can't fight financially. They tried by disconnecting Russia from the SWIFT system. It put in its own system very quickly. It really is left without a strategy, except that it's done a wonderful job of controlling the public relations dimension of this war, making it appear as if somehow other countries are the aggressors and not letting America exploit them. And making it appear as if Russia is the aggressor in Ukraine instead of NATO, prodding Russia to say, we're going to capture your port, Crimea, and we're going to attack the Russian speakers if you don't fight back, and we're going to keep bombing them year after year from 2014 on. 14 on. We're going to keep bombing them until you protect them. So all of this is treated as if America is purely defending itself. Well, this is what the Nazi said in World War II. Hitler and Goebbels said we can always mobilize a population to support our war by saying it's a war to defend ourselves. And that's how the United States and Europe are doing. Not only are they pulling a strategy out of Goebbels' Nazi book, but a few weeks ago, Germany went to the museums, the military museums, where they had the old Panzer tanks from World War II. And they sent the Panzer tanks the Nazi tanks in World War II to Ukraine, saying this is symbolic. Now we can fight Russia with the same German Nazi tanks run by the neo-Nazi groups that Zelensky is supporting, the same Nazi fight against Russia. We can reenact World War II with the same tanks, even symbolically, to show that this is a fight of Nazism, neoliberalism against Eurasia.
Do you think that the gold standard is going to come back, or apparently you don't think so?
No, Russia is not going on the gold standard. What it is doing is investing its foreign exchange in the only way that is not grabbable. It's investing it in gold. It's putting gold in its reserves. It is not setting its exchange rate according to the price of gold, but it is buying gold with the what it's been getting. I want to go back to your talk about ruble. You talked about from ruble to rubble with President Biden. There have been a lot of pictures of rubble in the news for the last few days. For instance, there's talks of, here's a Ukrainian sent out a picture saying, look at this picture of a Russian tank. We shot it down. It's rubble. Turns out it's the Ukrainian tank that they just say, oh, it's the Russian tank we shot down. Basically, they're taking their own destruction, and they're saying that while they're being destroyed, they're saying, no, this is a picture of Russia being destroyed. Russian assets, not Ukrainian assets being destroyed. Well, the similar thing is with Russia and ruble. America says, well, look, we've isolated the ruble. Well, what's happened if you isolate the ruble and you say, we're not going to export anything more to Russia, so it's not going to be able to spend any of its rubles on buying American or European products. Well, meanwhile, Russia can continue to earn rubles from Germany and Europe, and it can continue to earn foreign exchange from other countries that it's selling its agriculture to at rising prices, its oil and gas at rising prices too. So obviously the balance of payments is going way up, and they believe that what is in store is a new monetary system that is an alternative to the dollar IMF system. And this system other countries will hold their reserves in each other's currencies. In other words, Russia will hold Indian rupees and Chinese yuan. China will hold rupees and Russian rubles. There will be the equivalent of what Keynes thought of as bankers, something like artificial created special drawing rights that the banks will be able to create to help fund governments to undertake capital investment. But for settling balance of payments deficits among countries, once they have sort of don't have enough foreign exchange to make a swap, they will use gold as the means of settlement, because gold is a pure asset. It's not a liability. Any foreign currency basically is held in a foreign country that has the power to do what America did to Russia and just grab it all and say, we're just wiping it all out. It's as if you have a bank account and the bank says, we've just emptied out your account to give to one of our friends, and then you don't have it anymore. You can't do that if gold is held in your own country. Venezuela made the problem of keeping its gold in England, trusting England, saying that, well, even if there's war, they'll never interrupt gold and finance, and England just grabbed Venezuela's gold. So obviously, countries are not going to ask to leave their gold in other countries. Even little Germany has asked America to begin sending back the gold that it has in the Federal Reserve Bank of America, because it's worried that what if it ever buys Russian gas again? America will grab all of Germany's gold, grab all the German money, and it'll be like World War I all over again. They'll call it the Hun. We're taking its money. So you're having this act that America did of grabbing Russian money, Afghanistan's foreign reserves it grabbed. This is telling all the other countries, pull all your money out of dollars. What are they going to put it in? There's not that much that they can put it in that is absolutely safe. So gold is a flight to safety today, because it's one of the things that all of the world realizes as having an international value for settling balance of payments deficits that is independent of world politics. So that's the explanation. So Russia's not going on gold, it's going on an independent standard from the United States, with gold an element of its foreign reserve, just as it's holding Chinese yuan and Indian rupees. It's not going on the rupee standard, it's not going on the yuan standard, and it's not going on the gold standard, but these are elements of its foreign reserves. Every country needs to manage its exchange rates, and there's always like a up and down and a zigzag in the flow of payments for imports and exports, investment, capital movements, debt service, all of that. So countries want to stabilize their exchange rates, and how do they do that? Well, most of the big exchange markets are in New York and in London. So countries would leave their money in correspondent banks, like when Iran at the time under the Shah kept its foreign reserves in the Chase Manhattan Bank. So when Iran, after the revolution and Khomeini came in, and Iran wanted to pay interest on the foreign debt that the Shah had run up, they told Chase, please, here's our bondholders, please pay them. Well, Chase was told by the Treasury, don't pay them, just take the money and hold it. So Chase said, we put a freeze on your account. And so Iran defaulted, and then Chase and the State Department said, oh, Iran defaulted, it missed a payment. Now all the money that it's due for foreign debt has to be paid all at once, and Chase paid all of the bondholders off. No more money in the account, it was all emptied out. Suppose you had an account in Chase Manhattan, and I said, okay, now you've done something really bad. You put Michael Hudson on the show, we're going to grab your account. We're going to give it to Mr. Guaido because he needs the money in Venezuela because the people still are not voting for him. So all of a sudden, you won't have money in your account. It'll go to Mr. Guaido's account. Well, that's what happened with Russia. They took the money, they grabbed the money from Russia's account, and they said, half the money we're going to give to, I think, to the 9/11 people, because we all know that it was Russia that bombed the World Trade Center on 9/11. And we're going to give it to all sorts of other people who suffered all over the world. It's all Russia's fault.
But Professor Hudson, when you say that they seized Russia's assets, you mean the assets held by the Russian central bank in foreign bank accots?
Yes. Yes, that's exactly right.
And these are not physical assets. These are numbers in a computer, right?
Right. In Venezuela's case, Venezuela had used some of its oil company earnings to buy oil stations and refining companies. And the United States actually grabbed the ownership of the gas stations and refineries and distribution system that Venezuela had in America. But Russia...
it's called Citgo.
Citgo, yeah. Russia doesn't really have many capital investments in the United States. So all it did have bank accounts, and that was all that the United States could grab.
So I think this is also a reflection of a point that you've also made about the financialization of the economy. Is it's also just a lot of this capital is not even physical capital.
Yes, it's savings take the form. One person's savings is another person's debt. So these are Russia's deposits in American banks that it used to buy or sell rubles or to buy goods to America or to receive payments in. If Russia exports something to oil, Americans buyers would of Russian oil would put the money into here's a check to Russia. They'd put it in the Russian bank account. They never dreamed that this would be grabbed. But now Russia says, okay, you've grabbed our money. Now that means that we get to grab all of your assets in Russia. This is great. All of your stock holdings and Norilsk Nickel and Yukos and all these other companies, tit for tat. Okay, you got the money. We have the assets. Look at us as just buying the assets on the cheap. And the Western investors in Russia have all been selling their Russian assets to show that they're good American citizens of NATO, and the Russians are buying up these European and American assets all on the cheap, largely by borrowing money from the banks that get the money from the central bank now that they're so wealthy, and all of the foreign exchange reserves as a result from the American shock and awe statement that sort of shock and awe in reverse. Russia's coming through just fine, and you can imagine how the American strategists are gnashing the teeth. They don't understand how Russia was able to avoid being bankrupted by this. They really they're not economists, and they're not really financiers. They're foreign policy strategists. They're ideologues that are not very well educated in how to think about the future and how to recognize the fact that the world can actually change from what it is today into something else. And sometimes that change is not in America's interest. That is sort of not a permitted thought over here. So essentially, Americans and Europe are operating in the blind, and Russia and China and Iran and India are all looking, how are we going to restructure the world so that we come out of it more prosperous than we were before, not more impoverished. That's really what the world is dividing into.
Professor Hudson, I don't know if this is directly related, but it's something that's always been a very curious question in my mind. Germany, back in 2016 and 2017, it physically moved its central bank's gold reserves, which had been stored in New York, London, and Paris, and it physically moved those gold reserves, to Frankfurt. Now, this was before the U.S. and Britain stole Venezuela's gold reserves and other reserves. But do you know anything about this? What motivated Germany's central bank to move the physical location of its gold reserves into Germany itself?
I don't think it's all moved yet. It's still going on. Gold is very heavy. It's as heavy as lead, basically. And America said, well, we really don't have we can only do it a little bit, trickle by trickle. So America's been returning the gold very slowly. So I think Germany, with all of its talk about its history of hyperinflation, I think just wanted, it realizes that now that gold is not used to settle balance of payments deficits anymore, the gold that Germany had in America was all of the exports that it made to the United States during the Vietnam War. This is Vietnam War gold. When you remember that President de Gaulle would every month cash in the dollars that America spent in Vietnam, would all be spent from Vietnam to Paris. The dollars would end up there. The Central Bank of Paris would essentially buy gold on the London exchange and keep the gold either in New York or in London. Well, Germany kept, because America defeated Germany, and it wasn't going to keep its gold in Russia, that defeated it even more. It said, well, okay, we're cashing in our surplus dollars for gold, but we're going to hold the gold in America. But now it says, well, America is never going to settle its balance of payments deficits and its foreign debt in gold again, because it doesn't have any balance of payments surplus anymore, ability to do that. It doesn't have, it's going to spend its export surplus and its investment surplus on war. So as long it's never going to be able to pay, that's obvious. Let's get the gold back. That was the calculation that every country was making already a decade ago. They realized that America can never repay its foreign debt, unlike other countries. When other countries can't pay their foreign debt, they have to go to the International Monetary Fund that tells them, well, we'll make you a loan, but you have to sell off your natural resource reserves to the Americans, or we won't lend you the money. Well, basically, that's not going to happen anymore. They realize that America is just going to say, we're just not going to pay. Well, now other countries are saying, wait a minute, if America is never going to repay its foreign debt, why do the global South countries have to pay its debt to the IMF and the World Bank, all this dollar debt to dollar bondholders? If America won't pay, we don't have to pay. Let's have a clean slate. Let's start from beginning, and we're only going to have debt and credit relations with friendly countries, not countries that want to go to war with us, like America did in Afghanistan, Syria, Iraq, Iran, and now Russia. So that's basically what's happening.